Hello everyone, welcome to Just Invest Today, and today we are talking about Alibaba, we're talking about Tencent, we're talking about the Chinese market, we're talking everything China today. And I keep getting asked, why are you always talking about China, Baba, JD.com, Tencent, all of these companies? Because 50% of my portfolio is in China. That's why I'm doing it. So, guys, we have to talk about this stuff because it's key to our investment success. Everything here is going to lead us to the path of financial freedom, buying undervalued companies when no one loves them. So that's why we're talking about this right here. If you're loving this content, guys, please like this video, subscribe to my channel, man. Click that subscribe button right now. Let's really get into this video, and we can already see Baba is up 13% for the day, all because Alibaba did this. Alibaba hikes share buybacks to 25 billion after a record slump. They lost more than $400 billion of market cap, and even the CFO is coming out and saying Baba is extremely undervalued. And think about it, they're buying 25 billion of their company, and it's already at like what? Baba is priced at around $300 billion, so it's like around 8 to 9% of their market. Can you imagine that? They're buying back 8 or 9% of the company. That is amazing, and that's what we love to see. The CEO actually looking at the company and saying, it's undervalued, unlike people like Apple or Microsoft buying at all-time highs when the stock is really not undervalued. They're just buying back shares just to buy back because they're under some program. But Alibaba is looking at the market right now and being like, we are buying back more shares because our stock is so undervalued. So that's what we love to see from management. They're doing the right things. Look what the CFO came out and said. Alibaba's stock price does not fully reflect the company's value given our robust financial health and expansion plans. And this is the kind of backing we like to see, because who knows more about the company than the damn CFO? And I don't even think this is just like him speaking highly of his own company or the company he's working for. This is the truth. We see it. Everyone sees it. Everyone's talking about it. Yes, Alibaba is very undervalued, but everyone doesn't want to see that because it's in China, and no one likes to invest in China because there's so many different reasons. Then on top of that, we have so much things happening. China's cabinet vows stronger monetary policy support for their economy. So the government right now is looking at the economy. They're seeing all these things happening in China, and they're being like, we should do something about it. We want to continue to expand our economy. We want to grow higher than 5.5% GDP growth. And if they can do that, think about it. Alibaba, JD, Tencent, they're all going to expand and grow faster. And that's what we love to see, because think about it. Tencent, JD.com, Alibaba, they're the ones providing all the jobs. They're the ones providing all the money. They're the ones expanding the GDP because it's a new digital economy, and China is trying to expand on that. So all this is good news. The monetary policy, they're doing so many different things. The adoption of monetary policy tools to sustain credit expansion at a stable pace. The authorities also promise to maintain policies that can support the economy while pledging to avoid measures that can hurt market sentiment. So they're going to keep an eye on the market sentiment. They're not going to do any harsh takedowns or any other harsh things that they did in the past when it comes to the tutoring market, when they just boom, they shut it down. They're like, no more tutoring because we don't want to have any of these kids in distress or any parents in distress. So they kind of shut that all off so quick, and the market just went boom, responded, dropped 20% because of that. And then everyone feared about the delisting from Alibaba because of what the government was doing. So they're kind of sliding back on those type of measures that they're going to do. So that is really good news. But still, they're still going to have some crackdowns because Tencent faces possible record fine for anti-money laundering violations. On top of that, people are talking about how Tencent might have to kind of take WeChat into like a more financial stable position, because look what they did with Ant, and then WeChat on the other side does similar things, but they don't actually do so much of the credit thing as Alibaba was doing. So I'm not sure how that's going to turn out, if they have to kind of make WeChat a financial holding company or Tencent Pay a financial holding company. No one knows. It's all speculation at this point, creating more FUD in the market because no one knows for a fact, but this is the speculation coming up. So we kind of have to deal with it. We kind of have to talk about it. But look, the Chinese government is still having measures to kind of stop all the delisting fears, stop all the people saying that China wants to delist from the New York Stock Exchange, or the government is not working with the US, because they are. Chinese regulators asked some US listed firms to prepare for audit disclosures. Alibaba, Baidu, and JD.com. They have to prepare audit disclosures to the US, more audit disclosures. So you see how kind of China is actually bending to the rule of law of the US? This is all productive, man. This is super productive for the companies that we own. So it's not just China being shut-eyed to the US regulators and be like, no, we're not doing what you're saying. And that's how China would be before. But now they're open to discussions on what to disclose and what not to disclose. This is super important because China is establishing they want to be in the US market and they're willing to work with the government. And that's key because if you have aspirations to be the number one economy, you have to work with everyone. And no matter how you think about China, it's gonna be the number one economy. It just has too many people, too many brilliant minds, too many future job opportunities. The GDP is growing the fastest. Like, it's just going crazy. So you have to expect that when it comes to growth in China. So there's so much stuff to look for. On top of that, we have China's tech crackdown fans unemployment worries amid economic headwinds as Alibaba and Tencent prepare to wield the axe. And now articles like this are coming out saying how Alibaba, Tencent, JD.com, they're actually slashing jobs because of the crackdown from the government. So this is going to go either way, in my opinion. It's either the government is going to see, damn, we are killing a lot of markets, we're killing a lot of jobs because of this tech crackdown, and Alibaba and Tencent can't sustain itself with what the government is doing, and they kind of hold back on what they've been kind of doing over the years, right? So that can have a good effect on Alibaba, on Tencent, on JD.com, or they can still have these heavy measures. But think about it, Alibaba and Tencent are actually going to reduce their expenses. So you can see this as a good thing. They're going to reduce their expenses by cutting a lot of jobs that they really don't need. So they're going to cut off the excess fat of a lot of companies that are not producing as much profit or they're not seeing as much growth. Tencent talk about maybe reducing the cloud business, maybe reducing other businesses that they're not seeing as much progress. And Alibaba, same thing. LME, they're not seeing as much profit or they're not seeing as much expansion in those markets, so they might cut off jobs there to keep the pressure on providing a lot of value without taking a lot of loss. Because Alibaba, I feel like, is not in that phase of just crazy amount of growth. They're becoming more of a mature company now, so they can kind of settle in the role, but not settle too much because they still want to see growth, but kind of settle in their profits and their margins and just establish a good value proposition for its customers without losing a crazy amount of money. So this tech crash and this tech crackdown is going to weigh on the Chinese economy as, man, a lot of these companies can't be doing the same thing. They can't expand just rapidly anymore like they were before. So that can be a good thing, a bad thing. Who knows, man? They might not see as much profit revenue, but then on the other side, they're cutting down all the expenses. So that could probably generate more income for the company long term. So we're seeing a lot of things happening in the Chinese market, man. And I love to report on it. I love to talk about it because there's so much to talk about. But guys, that's it for the video. Tell me what you think about it. Like it, comment, subscribe to this channel, man. Peace.